All right, for this video, I wanted to talk a little bit about corrected Form 1099s and why it's always really important to wait to file your tax return until you have the most accurate 1099 provided to you. And specifically, what we want to address is consolidated 1099s coming from your brokerage accounts. So on this chart here, what I've summarized is the deadlines for when those brokers and other custodians have to file not only the 1099 with you as the customer, but when they have to send it to the IRS. So the most common 1099s are certainly the 1099 miscellaneous, the 1099 DIV, which is for dividends, 1099 INT, which is for interest income, and then the 1099B, which is for the gains and losses from the sales of those transactions. So those are the brokerage transactions. Now you can see here the due to customer. This is when the payor of the income has to actually provide that initial 1099 to the customer. So most of these are by the end of January. 1099Bs can go out Feb 15th. And they're ultimately due to the IRS at a later date. Feb 28th is the paper filing deadline, but this is actually extended to the end of March if they're going to e-file. Now, what's important about this is in a lot of cases, and what we're going to see from the example below, most brokers have to send you a statement that might not be completely accurate. And that's because they don't have enough information yet to provide you a full picture as to what the ultimate amount of income that was paid into your account. So let's look at this example here. I want to talk about it in a little more detail. So let's say during the 2020 calendar year, John received $3,000 in dividend income from an investment in a RIC. So that's a regulated investment company, publicly traded instrument that pays out dividends on a regular basis. And so John's brokerage company, recorded the $3,000 in dividends deposited into his account as non-qualified ordinary dividend income. So they sent him a 1099 that said, hey, look, all $3,000 of the cash that was deposited is non-qualified ordinary dividend income. And this is standard practice, right? They always characterize it as this amount initially until they get adjustments to be able to recharacterize it otherwise. So John decides, well, I want to file my return as soon as possible, so I just report the $3,000 on Schedule B as non-qualified dividend income, and if it's non-qualified dividend income, it's subject to ordinary income tax rates, period. Right? So he's got $3,000 of ordinary income, and then he files his return and he pays the taxes. Well, 2 weeks goes by, and then John gets an updated or a corrected 1099 from the broker, and the corrected 1099 recharacterizes that $3,000 in the following fashion. So just to keep in mind here, so as we're looking at these numbers, let me quickly add these up so you can see what I mean. So the $3,000 is the cash that was actually deposited into the account. Nothing changes there. But how it's characterized is what changes. So we have non-qualified ordinary of $300. We have qualified dividends of $2,000. We have capital gain distributions of $400. Non-dividend distributions of $100. And then exempt interest dividends of $200. So the total amount of income, actual cash that was received is $3,000. That remains the same. Right, so we haven't changed the amount of actual money we received. What we've changed here is how we characterize the earnings. And this is why it's so significant, because if we look at this, right, non-qualified dividends, $300, still taxed at the ordinary income tax rates. But $300 of ordinary income is much different than the $3,000 he's already recorded. So in other words, he has effectively overstated his income and his ultimate income tax. Because when we recharacterize these pieces, what we find, particularly down here, right? Exempt interest dividend income, this is municipal bond interest income, not subject to federal income tax. Non-dividend distributions, these are a return of principal or a return of capital. That's not income. It's just a reduction to your basis. So what John has done by filing early is recorded, in effect, a lot of phantom income. The capital gain distribution amount, $400, that's subject to long-term capital gains tax rate. So if you're on your Form 1040 and you're looking at Schedule D for the 2022 tax year, if you go down to line 13, you'll see a line item for capital gain distributions. That's where you would report these amounts. You don't lump all of this into Schedule B as ordinary non-qualified dividend income. And so again, the problem here is when you jump to go ahead and file as soon as possible before getting the corrected 1099s, you run the risk that your broker will correct things not just to make them more accurate, but when they're corrected, they're in your favor. So when you rush to file as soon as possible, oftentimes it's hurting you from a federal income tax perspective. Okay, so I hope that helped clarify things. Again, if you have a brokerage account, you're probably all too familiar with these. You get 1099s initially, and then you get a corrected thing, and you're wondering, well, what's the point? Why am I getting a corrected 1099? This is often the case, and this particularly happens with mutual funds, ETFs, RICs, a lot of other kind of instruments where you're getting a payout, but the broker hasn't received all the information to appropriately categorize all the amounts. So that's why I always recommend never file until, let's say, late March, right? So the filing deadline is mid-April, April 18th. I would never file before the end of March, early April. Ideally, you should always be on extension anyway, but part of why we don't file as soon as possible is for this reason. We want to gather as much correct information as possible before we submit the return. Otherwise, we are arguably filing an incorrect return for you. All right, so I hope that's helpful. I hope that helped clarify some of the issues that you might have when you see corrected 1099s. This is what's happening. This is what's going on in the background. So very important. Wait for corrected 1099s before filing, and you'll be better off with your tax return, because not only will you be filing a more accurate tax return, but the numbers will generally work in your favor where you'll actually be paying less money in income tax. All right, so thanks so much for watching. I hope this was helpful. Again, like all these other videos that I post on my channel, if you have any questions about any items, feel free to leave a comment below. I always welcome the questions, happy to answer as many as I can. And I look forward to seeing you again in the next video. All right, thanks so much. Take care.